Hi, I'm Victor. In this video, I'm going to talk about Allstate, the insurance company that I'm sure you're familiar with. This is a big insurance company that provides auto, home, renters, condominium, motorcycle, off-road, and other types of insurance. I'm going to give you a quick review of this company, tell you what I think about the stock, and why I'm an investor in this company. There's three things I look for in a stock. Is first, I want to know that I'm getting a discount and that my investment will go up in value over time. I want to know that the company is performing well and well operated. And last, I want to know that it's a good time to buy the stock. Let's take a look at Allstate. So the stock market today is down a lot. And for 2020, the stock market, the S&P is down more than 18%. That is a very bear market. Meanwhile, companies like Allstate have been bucking that trend and going positive. If you have been a stockholder with Allstate for the last 5 years, your investment has gone up 53.7%. And over year to date, you'd be happy to know that your investment is at 9.33% gain in year to date for 2020, while the S&P is down more than 18% and the NASDAQ is down close to 30% at this point. So it's a good stock to hold during the times when stocks are really getting beaten down. The reasons for it is insurance companies tend to be profitable and consistent. And Allstate has certainly been consistent. They've been profitable for 2020 and they pay a really nice dividend. I believe that Allstate is heavily discounted. I believe their stock price doesn't represent their value. I believe they're valued 110% more than their current stock price. Let me explain. I like to discount my expectation of free cash flows for a company into the future. And if I take a look at their last year of free cash flow, which will be the starting point, they had $4.7 billion of free cash flow. As we look at their future, I'm going to grow free cash flows by 2% for years 2, 3, 4. And then I'll have a terminal value for all expected future cash flows into the future. A couple of things, my growth rate is 2%, even though the company has been growing at 8%. I just want to be conservative. And Finbox has a weighted average cost of capital of 8%. It's the most conservative number they provided. They provide three different numbers. I take the most conservative one, the highest one. And if I use those variables, I come up with an intrinsic value for the company of $74.8 billion. But the market cap currently is 35.5. So I believe the company has a value twice their current stock price. On a stock price level, their current stock price is $129. But I believe each share is really worth $272 per share. So that's why I think this stock is heavily discounted. And that's why I own Allstate and I continue to buy shares. All right, now let's see if the company is well operated. So first, over the last 5 years, they've grown at 8%, which is really good. They have good free cash flow and that cash flow has been growing over the last 5 years, which is also good. Last year, they had $4.77 billion of free cash flow, which was a 13% yield on free cash flow. They had a nice dividend paid, nice price to earnings of 10.91, which is a low price to earnings ratio as if you compare it to other companies here in 2022. Q1, good earnings. The one thing that could have been better was they didn't grow their revenue. It was pretty much flat. Would like to see them grow, if anything, just a couple percentage points. They generated free cash and they went from having a loss in Q1 to a profit in Q1 of 2022, which is good to see. The earnings per share was $2.58, and they paid a dividend of 2.63%. The CEO commented that they're addressing the inflation by raising their premiums or prices, controlling expenses, and then investment allocations. Now, interest rates are rising, and that's a good thing for Allstate because if interest rates are higher, that means Allstate's going to make more money on their investments. Remember that when we pay an insurance company our premiums, they get to hold that cash and do something with it. So Allstate gets to earn a higher interest on that cash that they're sitting on. So I expect that's going to also help them in 2022, 2023, and into the future. I expect that these guys are going to grow slowly and generate free cash flow. They're going to be consistent. They're going to be profitable, pay their dividends, and give me an upside. Therefore, I'm going to continue to buy more shares, especially in 2022, where the stock market's so volatile and a lot of stocks are just being punished. Allstate is standing tall with a nice return in 2022, and I expect for the rest of the year for their stock to continue to go up in price. So overall, my score for Allstate is positive. You get a discount on per share because I believe their values 2x where their current stock price is at. The company is operated well and performing well. And it is a very good time to buy because there's few options in 2022 that are as stable and positive as Allstate. That's why I'm going to continue to grow my position in Allstate. So this video is for entertainment purposes only. I'm not recommending you buy Allstate stock or any other stock or security. I hope you found this video interesting. Thank you for watching my video. I hope you found it interesting. Please do me a favor and hit the like button on my video. It'll help my channel and this video get seen by more people. If you like the content, consider subscribing and hit the bell if you want to be notified when I create a new video. Thanks again for watching. Good luck investing in 2022.